Hi guys, another trade recap from a GU position we actually took on the 30th of June, and unfortunately it was a loser, and it kind of humbled ourselves with the loser. So, but I'm not going to say it's good because like this is a livelihood, it's never good losing money, but it's good in the sense where you can analyze where you went wrong and actually you can see from your perspective as well how we could have went differently like around this trade and what we could have improved going forward, where we could have had different biases, and just give you an insight into how we actually took this loser and the steps we're going to implement moving forward. So with this strategy, like I'm going to talk through now, we don't require any D1 bias, and normally we always require high time frame bias, whether that's on a 4H, whether that's on a D1. But with this specific strategy, we don't, because we've back tested it enough and we've got enough stats on it, actually trading it live as well, where we don't need a D1 strategy because the move is so powerful itself. And this may have been one of the times where we do actually hit a loser, as no strategy is 100%. So, but the annoying thing is, and I'll point this out straight away, because every morning when I get into the office, I always write down 2 levels on each pair I trade where I would like to see price action actually trade into, and what I'm going to do at this level. So I'll write, so in this case, coming into the 30th of June, when I came in the morning, I've marked out this level here. So it was the low, is the low from the 25th and the low from the 28th. And I marked out 138.711s on my notepad and just said shorts. So if price action came to here, I'd be looking for shorts down to possibly this low down here. So just have that in mind as we go forward. So this was around 9:30. Just play some price action. So immediately to me, we've had a raid of the Asian session here. So the market closed at 10 p.m. night before, and to me, like we've seen from 7:30, yeah, from 7:30 onwards. I'll just mark it out quickly so you know what I'm about. From 7:30 onwards, price action traded below the Asian session, which is the first step to our strategy essentially. So what we're looking for after this is the market to trade above the Asian session as well. So above this level, which I'm going to mark out on here. For price action to trade above this level, so then it could come back, we can get an entry around here to go long. So let's have a look what actually happened. Market traded up. So as you can see, the market has traded into this level, which I marked out here. Yet, as our strategy was conducive and we've seen the market trade above the Asian session highs, we're looking for an entry down here somewhere to actually go long. So if I just put the P&L as I would have had it, stops looking for, let's say I was looking for some highs there. I'm not going to put the exact stop loss placement and can't profit, as I just want you to see why the biases was different than it was. So let's say we were looking to enter the market around here on a little pullback to go to the upside, completely ignoring my bias from the morning, as I knew, and I wrote it out saying when the market comes here, I'll be looking for shorts. However, with this strategy, as this strategy doesn't happen often, we are biased on the trade actually change, and now we're looking for longs all of a sudden. And that's where it's important you actually, in my opinion, you stick to the original biases. The first thing coming to the morning and you look at the markets, you can see the fresh picture and the clear picture of price action, and you don't change your bias like as the day goes along. You might do, because the market might do something conducive to your bias, but you're less likely to change your bias on the day. So in my opinion, the reason we did hit a loser is we're looking for price action to come in here, just mark this out, come into our entry and bounce off and go like this. But I ignored the inverse level essentially and the inverse lows that we created here, as it was very likely that market was going to trade through these. come back up to retest this area again as a massive pool of liquidity around there, and then just shoot downwards, actually attacking these lows down here. And that's exactly what it did. But as I said, with us, we're very, with this strategy, it's very successful. So it's not that we ignored it. We just, well, we did ignore it, but we just went away of the bias we had in the morning, as our emotions kind of played this one, where we thought the bias to the upside is going to be stronger than the bias to the downside because of the strength of this position. And if I just play price action, see exactly what happens. The market comes in, bounces, so we actually get a bounce on our entry. So this is something we always see. Is am I going to stop for one candle or two candle, and then actually bounce straight off into, well, just trade. It will usually trade something like this, come in, attack these highs, retest these highs, and go into profit. Well, usually go to your take profits with intraday levels or previous day highs or lows. So once we saw this bounce, we're quite confident in the trade. However, the next two candles, yeah, you can see go straight to stop, and actually eventually take out this area here. So I believe we exited the trade for around minus 0.8 R. It wasn't quite a full R loss, as our plan actually allowed us to exit the trade earlier when we didn't get this bounce from this area we're keen to see a bounce from. So as I said, this strike rate on this pattern is very, very high for us, and our bias going into this was that we will see this move to the upside, completely ignoring this key area here, which off the bat is something we need to look at going into the future. A second thing also is, it was the 30th of June, which was month end, and there has been times where trading on month end, you do see some month end flows to and from the dollar. Dollar index was very strong on the day. So from this, I've started, personally, I've been looking at month end flows for every month in the last 3 years to see how the dollar moves around certain levels and around certain areas, which can also see month closes on the daily chart, whether on the monthly chart, whether there's patterns on the monthly chart, and when prices close to producing certain when price is close to producing certain candlestick patterns on the monthly chart, maybe it'll push those price points, or it won't. So that's another thing we're going to take away from this. And it's just, I guess it's just more and more backtesting of his actual strategy. But it has been a loser, and it's been known to have been journal with very detailed with very specific points at what to look at going into the future. But yeah, I hope you enjoyed that one, guys.